Hi, and welcome to this episode of On the Money. First up, are you claiming work-related expenses in your 2013-14 tax return? The ATO has work-related expenses in its sites, so check you have the right documentation. Particular attention is being paid to overnight travel, motor vehicle claims for transporting bulky goods and equipment, as well as the work-related use of computers, phones, and other electronic devices. If you're claiming any of these items, you need to prove you've spent the money and the expenses are job-related. Last year, the ATO commenced its crackdown on the process known as dividend washing. The next phase of the compliance program has now begun, and taxpayers who have either ignored correspondence or may have entered into a dividend washing transaction are being contacted. If you've received a letter from the ATO about altering your tax return, or you'd like to know more about dividend washing, be sure to ask us. Can salary sacrificing have an impact on your super? Well, it depends on how much you're putting aside. Salary sacrificing is a powerful way to grow super because income tax is redirected to your super account. So it's a way to swap your marginal income rate for the 15% contributions tax. It does mean less in your pocket at the end of the financial year though. Assessing the options is the best way to work out if salary sacrificing is going to suit you. Want to know what to do and when to do it to get your business tax and super done? The ATO has created an online newsroom to save small business time, with the latest tax and super news in one handy place. Use it to subscribe to news, rate articles, and add dates to your calendar, as well as opt to stop receiving general ATO letters in the mail. The ATO says it's committed to improving the service, so if you think it needs work, let them know. Although it feels nice to have a bit of extra cash after tax time, remember, it's not free money. It might feel good to splurge on something special, but using your tax return for something practical can pay dividends. Think carefully about where your debts or investments are before spending your tax return. Ask us if you'd like assistance on what to do with yours. The Research and Development Tax Offset has been pared back. The good news is it's still very generous. The refundable tax offset for eligible companies is now 43.5%. A non-refundable offset of 38.5% is available for all other eligible companies. This measure took effect on July 1, 2014. Time's running out for Australians with assets overseas to declare them with the ATO. As part of Project.IT, the ATO has been closing the net on Australians who avoid paying tax on overseas assets. Taxpayers have until December to disclose offshore assets, which will only be assessed for the last 4 years, and they'll only be liable for a maximum shortfall penalty of 10% of their debt. Those who don't disclose their assets risk investigation by the ATO as well as criminal prosecution. That wraps up this episode of On the Money. If you'd like further information about these or other accounting issues, we welcome your call or email. See you next time.